Everyone is scrambling right now to figure out what the best stocks are to buy in May 2025. Well, we're going to uncover that right now so you know exactly what to do and what stocks you need in your portfolio. Currently, our subscriber SCOE hypergrowth portfolio is up 93.87% in the past year, compared to the S&P 500 being up only 9.48%. I have 3 stocks that I believe will make many people rich. One of these is a smaller company with 100x potential. One is a sleeping AI giant with investments from Amazon and Nvidia, once ignored and preparing for the humanoid AI boom. If you watch the channel, you know I love the Humanoid story, a market projected to have the biggest total addressable market in history. But this isn't just a stock pick list, this is about understanding why these picks matter. Okay, and with that being said, let's get into the first pick. This $90 million market cap company is closely partnering with a $40 billion market cap company, and hardly anyone is noticing. I listened to their earnings conference call and highlighted some important notes so that you don't have to. And guys, this is the 100x opportunity I was talking about earlier. So first up, they were only recently uplisted to the NYSE. I think this is why a lot of people haven't noticed the opportunity. This company provides cooling services for data centers. If you don't know, data centers get extremely hot and need a lot of air conditioning. This is currently the projected data center market. As you can see, it grows exponentially all the way to 2030. And what's most important here is that they've partnered with Vertiv. And Vertiv is a pretty big company, guys. The market cap is $40 billion. And the fact that they're closely partnering makes me very excited. On the conference call, the CEO talked about Vertiv ramping up sales. Management is very optimistic about the partnership. The team is using SBC to incentivize team during growth. So basically, they've given stock to all employees, which will incentivize them to work very hard as the company scales up and increases revenue. The CEO said a couple things that are very compelling. He said they're confident we'll see rapid growth, there's interest from larger products, and there's significant headway into the data center market. And in the investor presentation from TGEN, they said that Vertiv is starting to ramp up, which means they're preparing for exponential growth. They're also getting interest from larger projects. Now guys, if we take a look at this graph, it shows the power needs of AI data centers. They said up to 30% of a data center's available electrical power may need to be allocated to cooling. Now computing is the revenue source for a data center. So obviously whoever owns the data center wants to allocate as much energy towards computing as possible. TGEN will actually help them do that because the Tecogen, which is their product, is 2x more efficient than other gas chillers and saves 50% more energy versus electric chillers. So their product is very efficient and it works very well. And this is why the $40 billion company of Vertiv has actually chosen to partner with TGEN, because their product is very good and they want to be able to put it in their data centers. Vertiv has said that they're going to launch a public marketing campaign with Tecogen soon. So just imagine that, guys. You have a $40 billion company launching a public marketing campaign with this $90 million market cap company being the main focus of the campaign. I think mostly that a lot of people haven't noticed it simply because it's only been listed on the NYSE recently, so it doesn't have a lot of eyes on it. I've made a post on Twitter recently about it though. It's gotten 86 likes and 128 bookmarks, so it looks like it's starting to get some traction, and I'm also making a video on it now. Just keep in mind though, guys, that this is a smaller company, and with smaller companies comes a large risk. If you want to see my posts before they go on my YouTube videos, you can look at my Twitter. My handle is SCOEX. And if you thought this stock was good, the next stock is an easy double in the next 12 months, and I'm going to show you exactly why. And the second stock on my list here is Nebius. The AI revolution is accelerating, and Nebius is at the center of it. Nebius is currently around a $9 billion market cap, so it's not a small company. They're in quite a few different areas that involve AI. For example, they have Avride. Avride is one of those robo-taxi companies. In 2023, the robo-taxi market was $0.4 billion. The robo-taxi market is projected to hit $45.7 billion in 2030, growing very quickly, and Avride is a part of that. But that's just one of the many areas that Nebius is involved. If you don't know, in the AI industry, one of the biggest bottlenecks right now is compute infrastructure. This means something like data centers, and Nebius exists to help solve that. One of the many reasons that large companies like Nvidia is using Nebius to perform AI operations is because they have industry-leading cost and energy efficiency. They offer about the same high-performance infrastructure as data centers coming from Microsoft and Google. However, Nebius maintains pricing that's often 20 to 25% lower than the average GPU provider. Not only that, Nvidia and Nebius are strategically aligned across 3 fronts. And remember that Nebius's market cap is around 8.8 billion. Meanwhile, Nvidia's is 3.3 trillion. So as they work together, Nebius stands to gain a lot. Not only only do they partner with Nvidia, Nvidia is also a shareholder in Nebius. And because of that, Nebius gets hardware priority. Nvidia will give them pre-release access to chips, making Nebius an even more attractive pick for companies to use for their AI operations. Analysts on Wall Street currently give Nebius an average price target of $43 per share. That'll probably be raised soon because Nebius has gone up quite a bit in the last few weeks. Two of the analysts say buy and one says outperform. If you don't know what outperform means, it just means that the analyst thinks that the stock will outperform the rest of the market for the next 12 months. The highest price target out of these three analysts is $60 per share, and the lowest one is $34 per share. And if we look at revenue estimates for Nebius in the coming years, we can see that it explodes. In 2025, they're expected to make $0.5 billion in revenue. And then in 2027, they're expected to do $1.8 billion in revenue. So growth for the company is going to be rapid. At the time of making this video, Nebius sits at around $35 per share. They report earnings literally tomorrow as I'm making this video. Tuesday, May 20th, we're going to get some updates on the company. And one way to see how effective Nebius's product is by looking at some of the customer reviews. And these are not single customers, right? These are not just normal people. These are entire companies using Nebius for AI operations. For example, Positronic Robotics say that they're using Nebius virtual machines with Nvidia to train AI models for robotic control systems, aiding in the development of intelligent cleaning robots. Crisp said that they reduced model training time by 50 to 80% by switching to Nebius. Converge Bio said they use Nebius to accelerate AI-driven drug discovery by training LLMs with proprietary biomedical datasets. This used to take weeks and is now done in days. So guys, as you can tell, Nebius has their hands in every spot possible with AI. I mean, if you can't tell by now, with ChatGPT usage, AI is pretty much the future, and Nebius is at the forefront of it. And shouts out to MVC Investing for the thread. And if you thought this stock was good, the next stock is at the forefront of the humanoid revolution, the product with the biggest total addressable market in history. There's also a big red flag in the stock that you need to know about, and that stock is actually Nvidia. Now, Nvidia, in my opinion, is one of the safest high growth opportunities on the stock market right now. For example, it's the #1 position in my portfolio. But there's kind of a big red flag with this stock, and I'm going to go over it in a couple minutes. In 2025, they're expected to make $130 billion in revenue and $73 billion in net income. Now, those numbers are absolutely incredible. But if we take a look at 2028, they're expected to grow really fast, with revenue of almost $290 billion and a net income of $154 billion. And if we take a look at some of the price targets from Wall Street analysts, we can see that the average is $163 per share. The highest price target being $220 and the lowest being $100. Out of all these analysts, 43 say to buy, 12 say outperform, 7 say hold, 1 says sell, and 9 have no opinion. And in the first time in I don't even know how long, the price target has been revised downward. In March of this year, the price target was around $173 per share, and now it sits at $163. And as we take a look at the revisions of the price target, you can see that in the past, it's pretty much only gone up, and just recently has actually been revised downward. I don't think it's something to worry about because sometimes these Wall Street analysts just base their price target off of what the stock price is. So if the price target is 150 and the stock price falls from 130 to 100, they'll lower their price target from 150 to 130. Not that anything's wrong with the company, the stock price has just gone down with the overall market. Okay, now what I really love about Nvidia is the humanoid robot market. Jensen Huang has recently said that the humanoid robots is a $50 trillion industry. Now currently, Nvidia is at the forefront of the humanoid robot market. What Nvidia does is offer a cloud to robot computing platform. For example, when a company builds a humanoid robot, they'll use the Nvidia platform to build the software. And one thing I love is that Jensen Huang, the CEO of Nvidia, is extremely involved with the humanoid opportunity. He doesn't ignore it, which tells me that they're ready to adapt. Humanoids and robotics developers, Agility Robotics, Boston Dynamics, Fourier, Foxlink, Galba, Mentry Robotics, Neuro Robotics, General Robotics, Guild AI, Xpeng Robotics are adopting Nvidia Isaac platform technologies to advance humanoid robot development and deployment. Here's a chart that estimates the number of human workers that are expected to be replaced by humanoid robots, and in 2050 that number reaches 63 million. I personally have zero doubts on how insanely large the humanoid robot market will be, but I think that right now almost no one is thinking about that. And once the humanoid story actually comes to light, I think everyone is going to be scrambling, looking for stocks to buy that are going to be able to capitalize on the humanoid market. And currently Currently, the number one stock to do so is Nvidia. So like I said, when you buy Nvidia, you get the core business, but you also get the humanoid robot potential, which I believe in personally that no one is pricing into the stock. Now to talk about the red flag that I see with Nvidia. So recently, Nvidia was caught in the US-China trade war. There were some new export restrictions placed on Nvidia, and in China, Nvidia's chip was banned, meaning they could no longer sell it there. And because of that, China's main chip developer, Huawei, developed advanced AI processors, which is a threat to Nvidia. And in 2025, China's revenue for Nvidia was $17 billion. So if they lose that, it's going to be a big hit to Nvidia. Nvidia's China revenue is now at risk as domestic alternatives emerge. For example, Chinese companies such as Alibaba may be using Nvidia's computer chip now, but since Huawei, China's AI chip manufacturer, is now improving and possibly becoming better than Nvidia, Alibaba might switch to Chinese-made chips from Huawei, and this threatens Nvidia's revenue. But Nvidia has developed a new chip to fit the new US export restrictions. Nvidia to ship new AI chip for China next quarter, modified Blackwell later. So essentially, this Nvidia chip is now even more downgraded than the last to fit US export restrictions. But will this downgraded chip match up to Huawei's new chip? That's sort of the red flag here, and we'll see in the coming months. Me personally though, I absolutely love Nvidia. It's the top position in my portfolio. I'm not worried at all. But guys, keep in mind, please do your own research before buying or selling any stock. This is not financial advice, these are just my opinion. I have way more picks that I'd love to show you guys, so feel free to leave a like and subscribe for upcoming videos. Peace.